Good morning, it's Harvey Jackson. Just going to get through some of the tariff news. The U.S. IEEPA tariff deemed illegal. Canada with little to no changes to the tariffs expected on the net rate. Some of that is because Kuzma is helping us out for sure, or USMCA, whatever you want to call it. So as of Tuesday, there's going to be no more tariffs applied. So and you can see here the Financial Times just had a breakout of who's going to benefit and who's going to get punished more, and just about everybody's welcoming the Supreme Court mention here of changing the tariffs and who's responsible. It's definitely hurt the reputation, I guess, of Trump just wanting to put on tariffs at any rate at any time. So yeah, anyway, he's got a restriction there. He's going to put on a 15% tariff across everything that is not already in an agreement. It will actually still continue to have money flow in there, but it's only for 150 days that he can have this tariff on. So you can see that might require Congress, because they're in charge of the purse, to be able to extend things. There's other clauses that he can find in there as well. So this is what I was saying is going to have little to no effect. Post the IEEPA, we're at 5.8%, and with the 15% on the goods that are getting put on, other than the sectoral tariffs on metals and steel, aluminum, you name it, is going to have little effect, and because of USMCA agreement that's already in place, and of course that puts more pressure on this USMCA as we move forward here as well. Fantastic numbers here. Last week crush was 255.7 million, or 255,784 tons were crushed last week. That's 11.3% up. They were lower than expectation just slightly last week, so we're at 6.763 million metric tons. And this week was at 93.7% crush capacity utilization. Year to date is nearly 93%. So good on it. It's the way this pace is going, we're probably going to be very close to 12.6 million metric tons crush just at this pace. Now, there's always a slowdown in the summer, as well as maintenance gets scheduled in across all the crushers in the summer months. But we also have 2 crushers coming online in the next few months as well. So Regina will be coming online, and both sides of the LDC plant will be crushing as well. They're currently crushing on the new side right now, but not on the old side. So they both will be opened up in the months to come here. Quick look at the weather. You can see that there's some warm and dry south of this basically ridge, and looks like snow is going to be prominent in the northern part of the western prairies here. Looks like the Great Lakes are going to get continue to be very active there as well. You can see the eastern areas still getting snow, little bits of bands of moisture going across the prairies there as well. The ice cover below the long-term average here. Cold weather kind of centered over Manitoba, North Dakota, Minnesota, and temperatures rising in the south. Your 4-inch volumetric soil moisture, there's still a pocket in Argentina, but you can see Brazil is very favorable for moisture. Drought monitor has increased in drought, and you can see there's basically a band across the middle growing area of the U.S. that's still in severe drought. It's something to be watching for. Nothing is really growing in that area as we speak. Europe in a bit of drought there as well. You can see even Ukraine, France, and Germany all with poor soil moisture. And you could say that this area right here that I would be paying attention to is Russia's wheat growing area, and it's drought stricken at the moment as well. Canola trading down $1.60 at the moment on May, and rapeseed is unchanged. Soybean oil is down or up 0.2 of a cent at 59.50. Crude oil at 66.24, unchanged. Soybeans 11.44, down 9 cents. Soy meal is down 5.20 as well. Spring wheat is down a couple cents, and your Kansas wheat is down 4 to 5, and your Chicago's down 3 3/4. Milling wheat is down $1.50. Corn is down a penny at 4.36, and the Canadian dollar is just slightly in the green. So if we were to break below that 200-day moving average, there's a good chance that there's going to be a market move down, probably halfway measured on the way down. So let's look at the 640-ish kind of an area from where we are. Canola futures on November, same kind of market move down is expected. Here's your European rapeseed. Here's your European rapeseed price in Canadian dollars differential at $102. And if we look at what that would mean if you're going to come from Vancouver, you're potentially, depending on the high and low cost of freight, you'd be losing money. And if you're pulling out of Thunder Bay, even at $84, it might not make sense to pull that product out of there either. This is just the price use or the percentage change since January 1st. The New York Harbor Freight diesel fuel prices and your soybean oil increases. So you got soybean oil increased 21% since the beginning of the year, and 19.3% of the diesel fuel. So they're getting more related with the renewable fuel programs that are pending to get announced. Soybean oil futures, here you are, nice increase, and that's basically the same leg that I just showed you. Soybean futures tailing off, looks like it's running out of steam here. Same thing with the meal. And your crude palm oil had a little bit of a recovery, but looks like it's trying to fail here as well. This is the Iranian pressure that's going on. There's a lot of increase of military buildup in and around Iran right now with the U.S. warships and everybody else there. Let's quick look at the Canadian dollar, tail down. You would say that you're losing steam when you look at some of these other indicators there as well. U.S. dollar trying to falter there as well at the same point. Gold has a pretty decent increase. Same with silver, especially with the Trump tariff news. Still expectation if you get to $100 there should be a seller on the physical. Wheat, long tail overnight here, but we're trading almost flat. Might be something to reward this 4-day rally, if you want to call it that. 3-day rally actually, but top end of this channel doesn't look like it wants to break out on the Minneapolis anyway. Kansas broke out and trading red today. Same thing with your Chicago trading above that 200-day moving average, which is bullish. The corn futures basically going flat here. Really nothing to write home about. The oat futures actually traded above the 200-day and trading right at it at the moment. So the cattle on feed report came out on Friday after the close, and they're slightly tighter than expected, so mildly bullish. Fewer placements, a little bit more bullish there as well, and the marketing was right on. So you expect this market to maybe get a little bit of a pop here. Same thing with the feeder cattle, and alongside that, you would expect the pork to maybe get a little bit of a boost as well. Next report is the acreage report that will come out on April 5th.